Welcome back to Yahoo Finance Live. Let's get to Yahoo Finance's Jared Blikre, who is standing by on the floor of the New York Stock Exchange for us. Jared, what are you watching?
Well, I'm watching the major indices, and I got some long-term perspective here the day after the Fed meeting, and let's go straight to the Wi-Fi Interactive so we can chart the price action. Now, first of all, yesterday, I gotta say, S&P 500 closed barely up, but 6 points of that was relative, or was thanks to NVIDIA, one of those AI stocks that has really been fueling the rally, not only this year, but going back to October. And in fact, the S&P 500 would have been down 10 points without the so-called AI mega cap stock. So important to realize that that's this big dynamic in here. Second of all, that's a candlestick pattern that we're seeing. Second, the penultimate one, second to today, little doji formation. Now, sometimes that can display or show, I would say, indecision on behalf of traders, and you have to get confirmation, but today is green. If we close above yesterday's close, that is not a confirmed topping signal at all. And you want to take a look at the NASDAQ 100. We are now just edging closer to some really big levels. Here is a 3-year chart, and I want to point out that 15,000 has been in play in a major way, both to the upside and the downside. And having said that, guess what? We've blasted through some earlier areas that also could have given a little bit of a hiccup, and in fact, that did not happen. The market was able to just power through them. So we need to observe, is the NASDAQ 100 fueled by those mega caps going to pause, or is it going to blast through once again? And of course, after it pauses, it could reverse. Enough of that, let's get on to the bond market. I'm still tracking the ICE B of A Move Index. I'm going to dial it down to a 3-month chart, and you can see just kind of consolidating underneath these lows we had for the year. Take a look at the VIX. So we just looked at bond market volatility. Now we're looking at equity market volatility right down by these June lows, which, by the way, are multi-year lows. So nice to see the bond market not really coming under too much pressure now. I'm coming around to the view that Powell and co. probably done. Well, yes, they could raise rates in accordance with what their summary of economic projections were indicating yesterday. They could raise another point, they could raise another time or two, but they're going to be, I think, very hesitant to break what is almost looking like a Goldilocks recovery. This has vibes of 2006, 2007, when the Fed went on pause. It looked like things were going to calm down. We were going to get a soft landing. Then 2008 erupted. I'm not saying that 2023 or 2024 has to look like that, but we should be open to the possibility because these things, especially when we're dealing with bear market forces and tightening by the Fed, these lag effects, these can have effects for months, if not quarters to come. Now, let's take a look at some of the sector action, and interesting to look at the leaders. Most of those have been in the value and cyclical sectors. This is today, energy on top, followed by staples and healthcare. A little defensiveness there, but you take a look at over the last 4 days, tech is the leader, and then you have materials, then consumer discretionary, then industrials. That is a pretty healthy mix of these mega cap and growth stocks, along with the traditional sectors that do well when the economy is performing well. So if in fact October was the low for years to come, this would be a very, very unusual bull market, as I've been saying, because usually everything goes up in the beginning and then you kind of sort out the winners from the losers. This was a very hesitant beginning. We had those mega cap names shooting up first, and now we're getting some support from the other sectors. But the bottom line is this rally needed breadth, and that's what it's getting.
Jared, on another note, just quickly here, it's the first day that you've had a big IPO there at the New York Stock Exchange in a while. Talk to us about what kind of crowd you're seeing.
This is a great crowd. I was struck immediately by how many people are in here. I haven't seen it this crowded in a long, long time. So this is a big IPO. No secret that the IPO and also M&A deals, all deals have been pretty much dead this year. You look at a chart of the new issues coming to market, it has flatlined after some really big years in 2021. Yes, last year was a disappointment too. So if this is a bellwether of stocks, of companies feeling that they can come to market, tap the capital markets for the first time here, that is a very encouraging risk on sign. I think people are going to be looking at this maybe a little bit too much as a bellwether. If the stock ends up down today, does that mean anything in the long run? No. I think it matters that Kava is here today. And thank you for the setup outside. It reminded me of a little Mediterranean lounge hangout out there.
Excellent.
I'm going to go get some juice.
Yeah, do it up. Our Brooke DePalma is going to be down there later with Brett Schulman, the CEO. Looking forward to that. And thanks for a little bit of description of what's going on down there, Jared. Appreciate it.
You bet.